Hey guys, this is Vasyl from the B-Dance, and today we're gonna review color accounting methodology as a foundational methodology for all of the 6 service lines that we provide. You don't want to miss it. It's very important stuff here. So check it out. So color accounting is an innovative method of teaching accounting where we use color, green for assets and expenses, which are uses of funds, and orange here for the sources of funds. And the focus of our firm is on this side, on the sources of funds, because it's very easy to focus on expenses. And of course, it's not to say that companies should not be reasonable with expenses. They should be reasonable, not overpay and negotiate well the deals with the suppliers. But here at our firm, we like to focus on the revenue, on the sources of funds, on this section here, on the orange section. So what are the sources of funds? So we have, so we can have obligation to creditors, which is funds from the banks and lenders. That's one way to procure funds for the business. Then we have equity, which is obligation to owners, funds that came from owners, investors, that owners and investors injected those funds into the business. And then we have revenue generated by business itself. That business satisfies customer needs, and because of satisfying those customer needs, the business gets the payment for the services. So that's the third source of capital, which is revenue generated by business itself. This model is a basic model, and it doesn't include 2 more sources of funds. The fourth one is the funds from the government through tax credits and grants from the government. So that's the fourth source that our firm specializes in tax credits. And then the fifth one is corporate sponsorship. It's when a big corporation sponsors a startup or a small company because the company is interested in building its reputation and brand recognition and being known in the community as a company that helps startups and companies grow. And then as they grow, they hire people, they invest in equipment, and so the economic cycle is flowing. So this is the model of color accounting. Sources of funds in orange, then uses of funds in green, and then there is the idea of the value cycle. And I'll use the Polish textbook for color accounting. It says podręcznik rachunkowy, finanse I business. Yeah, so I'll show you a value cycle from the Polish textbook on color accounting. And just for you to know, the languages that we offer right now, color accounting, we can do a workshop, 5-hour workshop for the business owners. We can do it in English, Spanish, Polish. We are working on getting Ukrainian translation done, and eventually we want to have a German translation done also. But for the time being, what we can do as of now is English, Spanish, and Polish. That's as of now. But as I said, certain projects are pending, and we are working on adding more language offerings. So let me show you this value cycle from the Polish book here. It's I believe it's page 22. Yeah, page 22. Yeah, so this is the value cycle. So in Polish it's called wykorzystanie źródeł finansowania, which is the use of the sources of funds. And you see we have aktywa, which is assets in Polish, and we have koszty, which is expenses in Polish. That's the expense side. And as I said, here at our firm, we focus on this side as far as the services, on the orange side, which is sources of funds, because essentially we want to say we want to help this company figure out how to get funds for the business. So, okay, what are źródła finansowania, sources of funds? We have zobowiązanie, which is obligations to creditors, loans and so on. Then we have kapitał własny, which is own capital or the capital from the owners and investors. And we have przychody, which is revenue generated by business. And so again, this is the basic model, just showing me three main ones. But as I said a minute before, we actually have 5 sources of funds, the fourth being tax credits from the government and grants from the government, and the fifth one, corporate sponsorship. So we actually have 5, but as a basic model, it's a good basic model. We try not to overcomplicate things in this model, but I'm saying in our firm, think about our services this way. So the first step, if the company is bleeding cash because of the back taxes and tax debt, what we do, we solve that problem first. And then we say, oh, cool, the company has a huge burden off of its shoulders, so now let's help the company figure out the funds. So we help with the loans. We have different lending partners. If it's a refugee entrepreneur, we have one loan program. If it's for this type of entrepreneur, we have another lending partner. We can package the financial statements in such a way as to maximize the chances. So we help with the loans, or funding, alternative financing. But then we also have with access of capital through raising capital. And just full disclosure that I'm not a licensed broker, so I do not broker transactions at this point, but I can connect to brokers that can help with the transactions. And then we talk about, so that will be in this, if we go that if the company decides to go the route of raising capital, we are in this rectangle here, which is the funds from owners and investors. And then when we talk about the revenue as a source of funds, that's where the fractional CFO comes in, because a company that hires a fractional CFO increases its revenue by 15% on average. And then this color accounting model is very cool for fractional CFO because there are 3 tiers of learning for business entrepreneurs. So the first tier is called Let's Talk Finance, which is this 5-hour workshop that I was referring to. Then it gives the foundations of accounting literacy. And then the second level is called Now Let's Talk. And in that level we do ratios, we do analysis of financial statements and give financial indicators to the owner so that they can plan their month, their quarter, their year. And then the third level is called Now Let's Keep on Talking. And in that level, we set up accountability clusters and accountability pods for different business owners to get together, to meet with them. We meet with the business owners on a regular basis for a monthly conversation to go through the main financial indicators and help them gauge their way forward for a month, quarter, and so on. And then a cool thing is that we incorporate tax planning in that fractional CFO services, and that way it's not only fractional CFO based on financial metrics, but we also incorporate tax planning, which makes tax return much easier at the end of the year because we did the planning all along in the proactive fashion and not reactive fashion. And then so that's we just talked about like 3. We just talked about 4 service lines based on the sources of funds. So we said that for liabilities here, we help with different types of loans through different lending partners. Then here on the equity side, we can help connect the company to brokers that can help them raise capital and so on. And then on revenue side, we can help with the fractional CFO. And then in the beginning, I mentioned tax disputes resolution because the first step is to stop the bleed before we help the company get cash. So we covered 4 service lines. Then the 5th one is based on the 4th source of funds, which is tax credits. So we help a company obtain tax credits such as R&D credits. And one of the offerings we have for the Filipino, Mexican, Indians, and Chinese people who come here, we coach them on how to generate R&D credits for the company, and then we walk them through the entire process of patent and extraordinary abilities in order to cut down their traditional wait time for a green card from 15 years to about 4 years. So that's a great way to use that 4th source of capital, which is tax credits. And then the 6th service line is tax due diligence at exit, at mergers and acquisitions. So one company merges with another company, or one company acquires another company. There are multiple checklists to complete, and the big piece of those checklists is financial and tax piece. So we help with those pieces of tax and financial due diligence. And at that point, we also need to figure out financing for the acquiring company. So we still talk about financing there. And then if the target company, the company that is being acquired, has some back taxes, it has to be resolved first before the transaction can even go through. So that's how we end up with the 6 services that we provide. And you see, this model is beautiful because we show that our firm focuses on the sources of funds. Yeah, with fractional CFO, we do touch on expenses too, but our primary focus is here in the orange on the sources of funds. We enumerated the services. First step, we stop the bleed at tax resolution and solve the big burden of back taxes. Then we proceed to helping with loans or with the connect to the capital raising opportunities or fractional CFO here, revenue and expense piece, and then tax credits is another one, and financial and tax due diligence at exit. And then the value cycle, the value cycle on page 22 of the Polish color accounting. Yeah, so we see this is the value cycle here. So we see how it goes from revenue and capital from investors and owners, and then capital from lenders, and you see how it goes to assets. And then some of those assets are being expensed, and then it goes back through the cycle. So you see, the idea is to maximize the company's assets, because as we maximize the company's assets and minimize the company's liabilities, then the owner's equity increases. So you see, it goes back to maximizing company's assets. And we can summarize this value cycle. A really good way to summarize it is with a quote by Viktor Frankl, who said that the purpose of life is not a tensionless state, but it's fighting and striving after a worthwhile goal, a freely chosen task. So think about it. The business entrepreneur freely chooses an activity through which he wants to add value to the society by meeting specific customer needs. So in our firm, we chose tax consulting and fractional CFO as the way to meet clients' needs. So it's a freely chosen task, and then it's striving and struggling after a worthwhile goal. So the idea of the struggle is to make sure that the value generation exceeds value destruction, that revenue ultimately exceeds the expenses, and at the end of the year we can post a profit. That's the constant tension that we are dealing with. So that really gives us a beautiful framework. So that's why I would say the color, I wanted to do this segment because I want to say, first of all, this is a foundation of all the other service lines we provide. And as I said, when we talk about 3 levels, it ties beautifully in fractional CFO because we start with color accounting, let's talk finance, then now let's talk, which is financial ratios, then now let's keep on talking, which is accountability. So we have levels, we can structure it in. So it really gives us really good and strong foundation. Plus, we have multiple language offerings, Spanish, English, Polish, and then Ukrainian and German are on the way. So that's the deal here. And I wanted to show you another picture here. So this is how color accounting builds on, lays out the foundations of accounting through 3 elements. So you see struktura, język, and zasady. So this is structure, language, and principles. In the new updated English books, language comes first now. So it goes like this now, language, because we got to understand the terms and definitions really well first. So language comes first, then structure, which is the basis framework. Basis framework means balance sheet. Balance sheet, you see balance sheet, which is here on top, you see assets, liabilities, and equity, and income statement, which is the bottom part here. So like, I'll flip it this way. So balance sheet here on top, assets, liabilities, and equity, and income statement here at the bottom part. So it's called basis framework, B-A-S, balance sheet, and I-S, income statement. So this is like our structure here, and then we talk about what's called here as the zasady of principles, is known as movement in the English textbooks, where it talks about using increases and decreases to the accounts. Because you see, if you look at these arrows here to the sides, you see how it says green is debiting and orange is crediting. This is on this side. So if on this green side we use green in one of these boxes here, we're gonna increase that account. If we're gonna use the opposite color to green, if we're gonna put orange sticker, because we use stickers in the workshop, we put orange sticker, we decrease that account because it's the opposite color. And then look on this, on the sources of funds, you see, is the opposite way. So you see, if we use green in the orange one, then because we use the opposite color, this orange account goes down. But if we use orange on orange, the account goes up. So that's the movement. So we go ups and down, up and down, up and down, up and down. So that's the movement. So that's why we have language, structure, and movement. And the final thing that I leave you with talks about a very overlooked element. So if do this experiment, go and Google accounting literacy, and you will see that the results are going to be pretty limited search results. But if you Google financial literacy, you're gonna get millions of results on Google. So you see, people tend to talk about financial literacy a lot, But what people don't realize is that accounting literacy comes before financial literacy. If you don't get the language, structure, and moment of accounting, it will be very hard to get financial literacy straight. Then if you don't get financial literacy straight, it will be hard to get to business acumen, which is precisely what business owners want to do. They want to use this financial information for shrewd business decisions. So here's a chart for you. Знайомиш рахунковищі, which is accounting literacy. That's the foundational element that a lot of people skip. They want to go immediately to знайомиш фінансову, which is financial literacy. So people like want to totally forget about accounting literacy, and they want to go level 2 right away. And you know, that's not how it works in the world, because you got to crawl before you walk before you run, and run before you fly. You got to go through the foundational blocks and loop layering, because one learning block builds on another. And then after financial literacy, we finally get to the top level, which is called przedsiębiorczość, which is entrepreneurship or business acumen. So you see how we have 3 levels. That's why we have 3 levels of training. So the basic workshop is called Let's Talk Finance, which is this color accounting basic workshop. Then we have Now Let's Talk, which is financial ratios. And finally, we get to przedsiębiorczość, which is business acumen, in the 3rd tier, when we create accountability clusters for the business owners to make sure we help business owners not just pin the goals down, but actually achieve them. So that's the overview of color accounting. And please reach out if you're interested to start with this workshop. We can do it in person or over Zoom. So either way that works for you. But that will give you a very strong foundation of accounting literacy, and then we can get you to subsequent levels. But we can start with this one. So thank you for listening and checking out color accounting methodology. Stay well and happy Thanksgiving.